Well, oil and gas expert Meka Olowola joins me in via Skype now as we discuss much more on this. He's the managing partner, Zenera Consultant. Meka Olowola, good to have you. Now, let's first of all start off with this. Your assessment of local content development in the oil and gas industry over the years in Nigeria. Your assessment now, in 2006, federal government set Nigerian content targets for the industry at 45% and 70% by 2010. How will you rate Nigeria?
Yeah, so even though we haven't met the target, but I think in my estimation, it's not all bad news. When we started this discussion, I remember we were talking about 5% compliance at best. It was about 2%, and then we rose to 5% before the law was enacted. And so 9 years down the line, we're looking at 45% compliance level now. I think that is commendable, even though we still have a lot of room to go. If we're going to be like countries like Venezuela that are, being able to turn this around and use it as a mainstay for their economy, we will need to do a lot more. But, the trend has been positive and it's quite encouraging.
Now, Meka, adopting local content policy and its benefit to economic development to all rich nations is not necessarily new, but conversations continue on value addition. What are your expectations in developing a strong roadmap towards value addition in Nigeria for the next 4 years? Let's do a comparative analysis of that with what we've done so far.
In terms of local content, I missed one word there that you mentioned, but I assume that we're still talking about local content. In terms of what we've done in the last 4 years, I think we need to see more aggression from the Nigerian Content Development and Monitoring Board. Like I said, we've done very well, but we now need to have zero tolerance for non-compliance. The greatest culprits here are IOCs, and we need to have the courage and the political will to go in and say, hey, guys, you have to do what is right. In your own countries, you comply with these laws and these acts, and you must do the same thing here. Now, when that is done, and then you translate the gains that come in from all of those compliances into capacity development, what you will then find is that you will see indigenous companies come up even stronger to be able, to deliver value and service in the upstream sector. In defending the IOCs, or in fairness to them, they claim that indigenous companies haven't developed the right set of skill sets that will match the sort of what standards that they are used to in the oil and gas value chain. Okay, so that is probably true to some extent in certain fields, but in the majority of the areas that have been highlighted as inclusion for the Nigerian Content Act, is very clear that Nigerians have demonstrated the capacity to be able to deliver very well, and compete with just about any service provider anywhere in the world. So in the next 4 years, what we should be doing is to actually have a zero tolerance policy, where before you get approvals for oil license renewal, before you get approval for your budget, when you go to NAPIMS, we will check thoroughly and also gauge, instead of just checking and inspecting, they should go to the indigenous service providers as well, to find out how compliant are the IOC, the international oil companies, in this regard, and then we will see things start to change very, very rapidly. So because if your license is not renewed, for the next 20 years, you would do something different. It will send a very strong signal to all the IOCs, and you start to see, compliance pick up aggressively, because we need to get to 70%.
We definitely need to get to 70% and even reach much more. But now, away from the conversation of value addition, now going a little bit much more in depth, let's talk about the role of research and development that has been on the front burner. The challenge of executing and funding research in the industry still persists.
Yes.
Your thoughts?
I agree very strongly. And if you notice historically, research is not one of the strongest forts, of Africa as a whole, right? But having said that, there's a lot of expertise that is coming in. We've learned very well from, the international, organizations, and indigenous companies are doing a lot more in that area of research. The greatest culprits in this regard is actually government. Do you understand? Governments are the ones that are not doing as much as they should in terms of funding, this research, But as far as appraisals are concerned for field development, oil field development programs, and the research that we need to do in terms of enhancing value, for oil and gas operations, that is being done very well, even at indigenous levels. But what Nigeria needs to do is to increase the level of
Yes.
research that happens at both the NNPC and at the Ministry of Petroleum Resources, levels, right? So that we can be at par, using data to interpret day-to-day, operational activities of oil and gas, operations and investment, and being very aggressive to make sure that these capacities are retained, within local confines. And so it's our own guys who are doing this research, it's our own guys who are interpreting this data and bringing them to the fore. Because if you see where the whole world is trending, data is king. And until you do research properly and find out exactly how many reserves you have, how many, barrels are producible, what is going to happen, what is, the trend, the global trends, and how are they going to affect, producibility, how are they going to affect the sustainability, of the revenues of, the government, you are going to struggle.
Okay.
Right now, people are moving away from fossil fuel. What are we doing as a country regarding that?
Now, Meka, let's talk about the just presented 2020 budget as well, and then looking at 2019 budget, as well as our current realities, the volatility of oil prices at the international market, the recent OPEC cuts of excess production as well. How well do you think this affects the oil benchmark of now $57 per barrel for the 2020 budget, taking note that we haven't yet made so much of progress with the 2019 fiscal year?
Yeah. Okay, so the way these things pan out is the Ministry of Budget and Planning will come up with all sort of numbers, so they'll peg, the $33 billion budget for 2020 at say, 55 barrels, $55 per barrel or $57, dollars per barrel or what have you. You see, but that's not the issue. The issue is that Nigeria is not able to meet the production quota to even service the budget. All right? That's what everybody is not looking at. If you look at, so we say we want to produce 2.2 million barrels a day next year to be able to service the budget, right? How much have we been able to produce in 2019, right? So that's the critical
That's about
question.
1.8 thereabouts.
Okay, so some of those numbers are very aggressive, right? Some are, if you look at it, the actual production sometimes go below 1 million, barrels per day, right? Because there's a lot of underreporting of losses that's going on, and also because it's not politically correct for us to record, some of those losses. They don't come out, very fashionable and very defensible for us. So, but the issue is that of maintaining production levels. Yes, the oil prices are volatile. We've seen it come because of restrictivity, within the Middle East. When the oil tanker was, ostensibly attacked by Iran, we saw all that whole spike go to up to $65, dollars per barrel. We've seen all sorts of shifts happening. U.S. is still defending, oil prices by pumping, shale. Right now, the U.S. government is the number one, producer of crude oil as we speak, hovering between 11 million barrels and 12 million barrels a day. and pushing Saudi Arabia to the back bonnet. So what I'm saying is that all of that dynamic is going to affect, prices, no doubt, and it's going to be difficult to peg what the numbers will be at a certain, ratio. When OPEC meets in Vienna next month, we will find out if we're going to maintain, the cuts just to defend, the price of the oil or not. But having said that, please, we need to focus on even being able to produce, the barrels in the first instance to be able to meet and service our budget aspirations.
Okay, well noted. Now, Meka, before I let you go, so many economic watchers are of the view that for Nigeria to do better with its revenue base, we have to diversify the economy to cushion any shocks from unpredictable oil prices. Now, that's on one hand. And then the other is what's also your scorecard, looking at how well we've fared with vandalism, oil bunkering, militancy, checkmating these menaces to ensure that we meet production capacity.
So if I take your first question first, the way there's no point, even though we are oil and gas, operatives, we haven't shied away from the fact that we need to diversify the economy, or rather diversify the earning base of government. Because the economy is not, if you look at our GDP, right, oil and gas is less than 10% of Nigerian GDP today, okay? So it's the government's revenues and government earnings and spending that is tied to oil and gas, not Nigerians' fortune, right? Not Nigerians, right? Because our GDP is 90% non-oil and gas based, okay? So what we need to do is to diversify government's own earnings away from oil and gas. And we have agriculture there, we have retailing, we have ICT. Look at all over the world, all over the world, Nigerians are making billions and selling their companies, for billions, in ICT. We have companies like System Specs who are Nigerians and responsible for the TSA, powering such a monumental technology that is driving something that is unprecedented in the history of Africa. That is an exportable, capacity or know-how that should go all over the world, that the government is supposed to use to drive and showcase to the rest of Africa and earn money, and not be chasing fossil fuel that countries are already declaring, zero tolerance for by 2030. France has declared 2030. Germany has done the same thing. The UK is 2050. There will be no petrol-driven vehicles. They will all go electric. All right. So we are still fixated with oil and gas in Nigeria today. That has to change. Let's go to agriculture. Let's go to ICT. Let's go to retailing. Now, talking about your second question, which is volatility, within the sector, that is there. There's militancy, there's theft, there's vandalism, right? These are issues that have been with us for decades. We've tried all sort of avenues, and nothing has seemed to work. But we need to do something. We need to do a radical approach to it. And I'm happy to tell you and your viewers that CSI in Action, a company that we have observed.
Meka, I would have to cut you off there. The conversation is pretty much vast. We have a whole lot more to talk. And I'm sure on the next invite, we'll touch on other pertinent issues. Thank you very much for your time.
All right,
Meka Olowola, oil and gas experts.
Thank you.